I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and this week we are talking about closing costs on purchases and how to understand them.
Right. We're not talking about refinances this week. This is the purchase podcast on closing costs. What are closing costs? How much are they?
Yeah. And, people might be asking in general, what are closing costs? What are typical average closing costs when it comes to a home purchase? And we can answer that today, but we can also, what we're going to do is we're going to answer this in the context of a sample, a real sample deal that we've been working on. It's a purchase, and we're going to be looking at the loan estimate. So the loan estimate is a federal disclosure. We're going to be showing people how to see these closing costs inside of this loan estimate because it's a federal disclosure. It's very confusing.
Right. Yep. And this podcast is not how to read a loan estimate, but this is closing costs in the context of a loan estimate. So we will probably dive into a loan estimate in another podcast because it is a government form, Ed, as you said. They are very confusing. We spend a lot of time every day of every week explaining what they mean. If we controlled those forms, I tell people they'd be so much more simple, but we do not control those forms.
Yeah. And right off the bat, I think a lot of people will think that closing costs are a percentage. They'll say, yeah, closing costs, right? They're 1% of their of the sales price. Now that was a very classic, back of napkin technique people would use, a calculation, but really it's not a percentage because this is the cost to do a loan. There's not much extra cost to do a $200,000 loan as a $500,000 loan. The same amount of work is generally going into it. It's not just a percentage of. So if someone were to ask me, hey, Eddie, this is right off the bat, like what are average closing costs if you added them all up, all the costs to get the loan done between a $200,000 loan or a $200,000 sales price and a $500,000, I would tell them my guess would be $3,000 up to about $3,800. Okay, that's my backup napkin because I do this every day. I'm thinking $3,000 to $3,800. Okay, I'm just throwing it out there as a total of all loan fees.
Yeah. So, I like to kind of think big picture. And so, yeah, to that point, someone asks me as I'm driving from an appointment to another meeting, what are closing costs? I'll typically throw out $3,500. So, they're going to be between $3,000 and call it $3,800, $4,000, $3,800, $3,900, somewhere around there. I do want to put in context, compared to the refinance closing costs we had in our last podcast that we did, was $2,500. So to put it in perspective, I mean, that's it. That's the enchilada. You want to know what closing costs are? There doesn't have to be confusion. There doesn't have to be gimmicks. It's $3,500, folks. So I think on a purchase, that's very, very simple. It can be higher. It can be a little less, but generally speaking, it's going to be in that range. Now we're going to kind of go over, what makes up those numbers.
Yeah. Okay. So we're going to use the loan estimate. We'll bring it up here on the screen. But again, in this scenario, this is a sales price at $370,000. Borrower would be putting, I think it was 20% down. 20% down. Okay. The total closing costs in this scenario is at actually $3,563.
Holy cow.
Okay. So, yep. We have now. If you are looking at a loan estimate, the loan estimate is 3 pages long. At the bottom of the first page, you will see it says estimated closing costs. And you'll see this big number that says $4,963. We want to just make sure you look to the right, and you will see includes $3,563 in loan costs. Those are the closing costs. Okay, those are the closing costs we're talking about. Plus $1,400 in other costs. The other costs are not closing costs. Those are actually prepaid taxes and insurance. And we will make this distinction later.
Yeah, also known as the impound account. Escrow account, aka prepaids, that is, you just said. And it's very, very important to note they are not a closing cost. They are a cash to close item. So you have closing costs, and then you have cash to close. So they are not one and the same. At the end of the day, they're both money, but one you're just basically prepaying for your own future benefit. Versus closing costs are spent costs. They're done.
So again, just make it simple. What are closing costs in this scenario? $3,563. Okay, those are the closing costs.
Let's go through it and break up the 3,500.
Okay,
just give them some categories.
So page 2 will show you on the left side all of your closing costs, and that's it. That's the simple way to look at this. It's page 2 on that left side, starting from the top to bottom.
Mm-hmm. And starting from the top, there's, we don't charge points on our loans. Every once in a while, a borrower wants a lower interest rate, and so we'll give them, lower interest rate options. But generally speaking, we don't have points. Underwriting fees are part of every loan. If they are not in the loan, as a closing cost, they're being buried into your interest rate. So again, it's very standard to have an underwriting fee of about $1,000. So that's the first one.
So next section is going to be where we have the appraisal fee. Okay, so the appraisal fee in most cases is going to be between $500 and $550. It's a very straightforward fee. It's the only fee that typically you are prepaying. We don't ask you to pay the underwriting fee, title company fees. There's no other fees that you're paying for up front. But before the appraiser goes out there, the appraiser wants to get paid, and that's generally between $500 and $550.
Yeah, and very, very standard. VA appraisals are actually a tiny bit more. I think they're closer to $600.
They are 600. Yeah, so $600 up for those.
But generally speaking, Ed, yep, you're right. Between $500 and $550 for the average appraisal. There are what we call appraisal waivers. People will ask us on purchases. Yes, they do exist. If you put enough money down and you have good enough credit, and Fannie and Freddie are able to, do all their little algorithms and triangulations, they will sometimes give you a waiver, which is really nice. You as the buyer may not want to exercise your right to get that waiver. You may want to know what that home is appraising for. But we do get that asked every once in a while. Okay, so that was the appraisal. What's next?
So you have a credit report fee. Everyone has a credit report, or you need a credit report pulled. So generally speaking, those fees are going to be between $40 and $60 nowadays.
And you mean credit reports aren't free?
Credit reports are not free. Isn't that funny?
Whoa.
Yeah.
Interesting. Yeah, people don't know that.
The credit bureaus have been, the Equifax, Experian, and TransUnion have been raising the rates every year. It's crazy. I mean, it really, the invoices are massive for credit report fees.
It's incredible. Yeah, it really is. Okay. And also, just so you know, the Mortgage Brothers team, Signature Home Loans, we don't make a dime off credit reports. There is zero zilch. So we wish they were free.
We don't make any money on these things. So we don't make any money on our appraisals, credit report fees, title fees, none of that. Now, this next fee is a flood certification fee. You're going to see that. You're probably going to be seeing a flood cert. You'll probably see a tax certification fee. And, on this loan estimate, there's also this tax-related service fee. Guys, there's going to be a lot of different ways you'll see banks disclose these fees. But generally speaking, you're going to see flood, maybe $15. And for tax fees, anything related to tax, these are what the banks are doing to charging, about $80 or so. Why do I need these tax-related fees anyway? The flood insurance is to certify that you do or don't have flood insurance.
Right. So if we didn't have that fee, you'd be forced to have it.
Right. So we need to the bank needs to verify it. There's fees to do that because there's maps on the FEMA and all that stuff. There's work that goes into doing that. Tax certification fee. What that fee really is for is to verify that your taxes are paid. The taxes are, they need to make sure that they accurately document whether or not they've been paid or not. So that's those are very typical fees you're going to see. So next section, title company fees. You're going to see something called a CPL on everything. Closing protection letter.
Yeah, can I just jump in really quick on these title costs? It's important for people to know too that we don't control who the title company is, so that means we don't control these fees. So these are just simple estimates, not only for this podcast, but if ever you were to call us and ask, they would come straight from the title company. So I think people should feel very good that once you get over, the underwriting fee that is part of every loan, everything else is I call a very kind of boring one-dimensional fee. They're all pieces that every loan has, and we don't control. Title companies are very, very competitive. So their fees are just simply dictated by the title company that either you or the seller choose. So sorry, Ed. Okay, you're talking about the CPL.
Closing protection letter is something that all banks have asked title companies to provide. It's basically a hold harmless waiver. You'll see doc prep fees, you'll see endorsement fees, you'll see a lender's policy fee, and a title either escrow fee or settlement fee. These are going to be things you're going to see in this section, and they are really all going to add up, in this case, to about $1,800 to $1,900.
I think the two that we ought to focus in on are the settlement fee, which is also known as the escrow fee, and the title policy. Those are the two big ones. What in the world is an escrow fee?
Right, the escrow fee. Sometimes you'll see it. Settlement fee, escrow fee. That's the cost to do the labor. That's paying the title company to do the work, and there's a lot of work the title does.
That's a ton of work. So again, not paid to the lender, not paid to the real estate agent. That simply goes to the title company who's performing all the due diligence they need in order to prepare the work, to prep the docs, and to get everything figured out, for your property. So,
and these are not fees that you're paying for the seller either. And I want to make sure that we make that point. Sometimes people think, well, gosh, am I paying all the fees? What about the seller? The seller has, in most cases, they pay half of the escrow fee, and you as a buyer pay half the escrow fee.
Okay.
Okay, so this
Okay,
is
good.
about $500 is for the buyer. About $500 is going to be for the seller. The seller's going to have their own closing costs.
Now, how about this lender's policy? Is that how the lender makes their money? That's how the lender makes their money. What is that?
So the title company is going to be ensuring that your home that you're buying, that the chain of title, which is the people who've owned your home in the past, that all the proper documents that were recorded at the county, and that those owners released their ownership so they don't come back in the future and say, wait a minute, I own that home. They want to make sure that nobody is going to come back and make a future claim on your home.
Right. If someone were to all of a sudden knock on your door and say, "Hey, I'm the fourth heir of so and so's estate, and you're actually in my home. Get out of there." Right? You'd actually pull up this lender's policy, and it would be up to the insurance company, the title company, who's really an insurance company, to make it right for you, make it right for the lender.
If some guy knocks on your door and says that it's actually my house, and they actually provide documents, and they go to court, and the court say, gosh, this guy who shows up at your house actually is the real owner, that's when this policy pays out. I don't know anyone personally this has ever happened to. Technically, it does happen. It's out there, especially in very old cities, states, and counties, especially, the back east, where documents for the last 200 years for deed transfers have been, there were old filing systems.
You know what we can call this for our listeners? This is kind of like a Carfax, but for homes. This is basically a policy, a little something that you pay for that tells you exactly the history of your home. It's not a really good example, but it's close. It just helps ensure and provides comfort for both you, but even more importantly, the lender, that before they give you their $300,000 for that loan, or the $400,000, whatever it is, that they know you have every right to buy that property. So those are the two big things on the title.
Okay, and that really sums up the closing costs.
Mm-hmm. Now let's just touch for a second on the prepaids and the impound account, because people will get confused. Wait, I thought the Mortgage Brothers team said that it's only $3,500. Yes, it is only $3,500, but there's also that cash to close component for insurance and taxes.
So on the top right section of the second page of the loan estimate, you will see these costs that Tom are talking about. The prepaid, this section is called other costs. You're going to see a $60 recording fee. That's basically the county recorder's fee to record your documents.
Yeah, homeowners insurance and taxes. You and I spoke about this in one of our other podcasts. Prepaids, aka the escrow accounts or the impound accounts, it's kind of like getting gas for your car. It's something you have to outlay, something you have to pay, but you're not paying it to a lender. You're not paying it to a title company. You're not paying it to a real estate agent. You're paying it actually through the lender for your own benefit. You're putting basically gas, it's just insurance and taxes into your home so that the lender can use it, pull it out as you live in your home.
So a buyer might ask, well, where does this money go? If I'm paying $1,400, whatever, these prepaids, what is the bank doing with them?
Right. It's actually sitting in your house gas tank. It's sitting in your little escrow account. And so it's a little account with your name on it, your loan number on it, and they are going to be pulling money from your mortgage payment every month into this account. When your insurance is due once a year and your taxes are due twice a year, that there's always 100% of what's needed in the account at that time. But it's important to note they are not costs, but they are cash considerations.
All right. Well, there's lots of things to talk about on a loan estimate, but the most important thing that this podcast wants to communicate is how to read these closing costs and make sure we're just making a distinction between the closing costs and these prepaid items.
That's it. If you're getting, mixed signals or information that doesn't seem right or closing costs are high, call us. Again, it's not rocket science, folks. This is extremely simple. $3,500 for purchases, $2,500 for refis. There are exceptions here and there, but that's a great rule of thumb to use for the near future.
Yeah, and I had a customer the other day say, "Wow, $3,500. That's a lot." I just had a lender tell me $1,000 was the closing costs. See, what happens is you're going to be receiving information from banks. You're going to be asking them how much are costs, and they're going to say closing costs are $1,000. Well, what they're telling you is their fee is $1,000. They're not telling you everything else. Everything it takes time, it takes energy to get loans done. If it seems too good to be true, it will be too good to be true. If the loan costs are low, there's probably a higher interest rate, all sorts of stuff that offset it.
That's right. All right. Well, thanks a lot, folks. Hopefully this was helpful for you.
Take care, everyone.
All right.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.